Investing in real estate is a great way to build wealth and also earn passive income if you invest in rental properties. So how do you invest in real estate for retirement? I'm Rosanna Quinnen. I am a financial advisor who specializes in realtors. And I speak to agents all the time about investing in real estate because as experts in real estate, they know it and they know how to value the properties and what's a good investment. One of the ways to invest in real estate for retirement is what we call a self-directed IRA. And in this video, I would like to share with you some overall high-level features of self-directed IRA to give you an initial understanding of this type of an account so that you can decide whether you want to explore it further, whether a self-directed IRA is the right tool for you. So what exactly is a self-directed IRA? Traditionally, IRAs, which are individual retirement accounts, are invested in the stock market. And they're invested in stocks and bonds and some other instruments like ETFs. And when you invest for retirement, you mostly go to institutions like Vanguard and Fidelity who specialize in stocks and bonds. And that's why you end up in the capital markets or in the stock markets with your retirement accounts. And the IRS has specific rules about these types of accounts, and you cannot invest in real estate in those types of accounts. So the self-directed IRA is type of a retirement account that allows you to invest in other assets, such as investment properties. There are other rules and types of investments that you can make in a self-directed IRA, such as business or other types of what we call alternative investments. But for the moment, we will focus on real estate. So a self-directed IRA can invest in real estate, and more specifically, it can invest in rental properties. Now, the IRS has very specific rules around self-directed IRAs that you should be very aware of and make sure that you don't break them, because if you break those rules, the tax status of IRA becomes taxable and you lose all of the advantages. I want to start with, how do you start a self-directed IRA and how do you go about investing in real estate? The contribution limits for the self-directed IRA are the same as for a normal IRA, which is about $6,000 or $7,000, and that's not enough money to get started with investing. But what you can do is, if you have an existing IRA that has quite a bit of money in it, you can do a tax-free rollover into a self-directed IRA and invest in real estate there. So say you have $200,000 balance in your traditional IRA, you can roll that over into self-directed IRA and take those $200,000, invest in an investment property. You can also take a bank loan. There are specific banks that will allow you to take on a mortgage for a self-directed IRA. But there are specific rules about what types of loans they are. There are non-recourse loans, which means that if you default on the mortgage, the company can take back and foreclose on the property. As such, you probably want to consider self-directed IRA when you've accumulated sizable investment portfolio, or you're comfortable taking a bank, or actually you can find a bank that will finance a large amount of your mortgage. The second thing that you can do here is open an LLC. So when you have a self-directed IRA and you have an LLC, the LLC is owned by your plan 100%, and it is the LLC that will invest in real estate. It will collect all the rental checks and it will distribute to your retirement plan. Related to the fact that it's a separate entity like an LLC, what the IRS has is very strict rules about what you can do with the self-directed IRA and what you cannot do with the self-directed IRA. They basically want to make sure that you're not self-dealing and not benefiting from your own retirement account. Because of that, you cannot invest a real rental property and have your family live there. You also cannot contribute what we call sweat equity, meaning that you cannot be the building manager or the property manager and go over and spend hours of time fixing the property and fixing the problems, and thus saving money and also benefiting from this tax-free status. Most people who invest in self-directed IRAs and properties hire property managers, and actually your IRA hires the property manager and pays for the expenses of the property and pays the taxes and manages property and an arm's length transaction. Another thing that you cannot do is have your family live in the rental property or have your family, immediate family, involved in the management of IRA. They are what we call disqualified persons who are not allowed to have access or manage your self-directed IRA. When you have a self-directed IRA, the best thing to do is to have a trustee or a custodian who is very knowledgeable in this area. As an advisor, I can advise you on the cash flows of the account, whether if you identify a property, see how it fits in your retirement portfolio and with your financial goals. But self-directed IRAs are complex enough that you want to have a custodian or a trustee who have experience, who know all the rules, and they will know and stop you from doing something wrong or something that runs against the rules. Because again, the IRS is very strict about the self-directed IRA rules, and they will punish you if you do something wrong. So the bottom line is a self-directed IRA is an account that is available to you to invest in real estate. And you need to consider the features of it, the benefits, and also how complex you want your retirement planning and your retirement income to be before you decide whether this self-directed IRA is right for you. One consideration here is with retirement accounts, when you hit 72, you are required to take distributions. So a portion of your investment portfolio has to be distributed to you on a monthly basis, and they are called required minimum distributions, or RMDs. If you invest in real estate, it's an illiquid investment, and you need to have enough income from this investment to make sure that you satisfy the RMD requirements. Investing in real estate in a self-directed IRA is a great idea, and it's right for some people, but not all. It is important to sit down with an advisor and look at your situation and really make a thoughtful decision about whether investing in real estate through an IRA or outside of an IRA is a better option for you. I hope this video is helpful, and if you have any questions about self-directed IRA and how to go about exploring this option, I'll be happy to talk.